Hello again, this is Alex with MasterChartsTrading.com. Today is Friday, November 24th. So, first of all, Thanksgiving holiday in the United States. I want to reiterate that we need to practice gratitude and charity, especially for those people who trade stocks and actually are making money in the stock market. I think this is important. Component of your practice is to donate some money and possibly some of your time to charity. There are many people out there who are in much worse shape than we are, and we're lucky to have even to be able to trade. So I practice this daily basis, gratitude, charity, and of course keeping your mind open to multiple futures. I'll get to this in a second, but I wanted to touch on multiple futures first. So briefly, I posted this to my stock tweets. I'm grateful to my subscribers, followers, thank you. I hope my work helps you achieve your goals, and this is from my newsletter, daily newsletter. Don't be greedy, take what the market gives and move on with your life. So this is just something to keep in mind. You cannot win every single trade. You're not gonna hopefully lose every single trade, but whatever the market will give you, be grateful for it. Another very brief aside, I like science fiction. I like Frank Herbert. This is one of my favorite books, Dune, and here's a quote I found there. Very cool use of English language, and he mentions that Paul, the character from Dune, was computing and contemplating most probable futures, and this just kind of makes perfect sense to me because, for example, we can trade futures. We can actually trade S&P 500 or oil futures, etc. So this is goes back to keeping your mind open to multiple outcomes, and those multiple futures, they constantly creep up in trading because we don't know exactly what's going to happen, but we do know that we have to keep our minds open, otherwise we will get stuck in one way of thinking only. Anyways, aside, so we're going to cover stocks, bonds, junk bonds, dollar index, gold, oil, and natural gas. Pretty standard, straightforward video as we normally do. So let's start with S&P 500 ETF SPY. This was a short week, obviously, so we had no trading on Thursday, yesterday, and today is Friday. The 24th, we have fresh all-time highs, of course, on holiday volume. Nevertheless, the price really is the final arbiter. We don't really get paid in volume, we get paid on price. So if you have a position, and we have positions open for MasterCharts trading, in S&P, in Dow Jones. I personally have a position in Dow Jones. So looking at the chart of S&P 500 ETF SPY, I marked this area around $254 as a first support level. Now, how did I figure that out? So there are multiple ways of doing it. Number one, of course, is the lows from October right here. Now, I use a little bit different technique. I'm using my own indicators. You can get this MasterCharts trading indicators. Just ask me. You get them with a subscription. So here's S&P 500 ETF SPY on this particular indicator as well, and you can see that basically this is the level. It's given me that level, $253, $254. So this is the first level I'll be watching on the pullback, and obviously this is a bullish chart because these are all-time highs. If you need more confirmation, we see a confirmation from the advanced decline line, and recently from advanced decline volume line. Now you can see the advanced decline volume has been kind of trading sideways, advanced decline line trading up slightly, so small divergence, and this is why I'm looking at this particular level for a pullback. Here's S&P 500, the index itself. Not a big fan of divergences, and especially of late. Notice that divergences are notoriously difficult to trade off. Those divergences could continue for a long time, and we don't exactly know where to buy or sell. I need to know where I'm buying and selling. I don't really care about divergences that much. So here's a divergence. You can see that RSI, just a regular good old RSI, became overbought here in October, and since then has been making lower lows and lower highs. Does that mean anything? Don't know. We can see that we have a higher lows and higher highs in the index itself. When will this divergence result in something, and will it even result in something? That is even a bigger problem, because those divergences, notice there's one really big divergence here in March, June, and you can see that, for example, here's bullish percent index, it's been dropping, RSI has been dropping, and what happened? Nothing. We just continued higher. So as of late, I'm pretty much ignoring all of those divergences and concentrating almost exclusively on price itself and to a degree on volume. Sometimes volume does give interesting patterns. So here's weekly S&P 500. Notice hollow candlestick break to fresh all-time highs. I don't see again any major issues with this chart. I'm sure eventually we will roll over, but we don't know, is it going to be at 2600 or maybe it's 3600? Who knows? And also we don't know at what time frame. Are we going to roll over in a couple of months? Are we going to roll over in a couple of years? So best thing, especially for beginners, is ignore all of those stuff and just simply look at the price. Is the price going up? In this case, yes, unequivocally so. The price is going up. So ignore overbought conditions. That's right. Ignore overbought conditions and concentrate on oversold conditions. Look for oversold conditions and buy at those points. So here's a really easy way to look for oversold conditions. Here's a breadth momentum oscillator, ITBM RANDX right there. You can find it on stock charts. It's a free indicator. So for example, here back in August and back in July, you can see clearly oversold conditions. So that's one of the ways to trade, and I have not personally back tested this particular method, but for example, on this particular chart, this look like a viable method. Simply look for oversold conditions and buy them. And here's the reason why I repeatedly caution against shorting clearly bullish charts. How do I know it's a clearly bullish chart? Because these are fresh highs. These were fresh highs back here in 2016, 17. These were all continuously fresh all-time highs. And then we see, like, for example, here's a red candle with a bearish engulfing, possible topping candle, couple of shooting star, scary looking candles right there in August. None of them really resulted in anything even remotely profitable for the bears. It continuously pushes to fresh highs, this index. So eventually, once again, we will see true bearish pattern, but I don't see it just yet. Here's IWM, and subscribers are long IWM, and I wanted to point out this price action here in mid-November. Notice how we have hollow candlesticks, hollow red candlesticks. Hollow red candlesticks, one of my favorite candlesticks, because this is clearly showing bottom in action. Also, you can see that there is a buying shadow out of the bottom here on mid-November, multiple buying shadows out of the bottoms of those candlesticks here. So this was a sign for me to look for bottoming pattern in this clearly bullish security again. IWM on the weekly time frame, yeah, it's more choppy. Again, IWM represents like 10 to 15% of a total stock market. So again, in my opinion, I would skew my personal portfolio towards the larger caps, and this is what I've been doing. My portfolio currently consists of mostly large caps, some mid caps, and just a few of a small cap, really volatile stocks. Very small amount, and I make sure that the position size is correct. And I actually teach that at Master Charts Trading. You can sign up, and I teach you how to size your positions. I think it's like 75% of your work basically as a trader is to size your positions. In other words, how many shares are you gonna buy? XLK, same thing as QQQ, just a slightly different composition. Fresh all-time highs, advanced decline lines are also hitting fresh highs. So again, unequivocally bullish chart. I would not short it. Here's financials, a little bit under pressure. I think it has to do with bonds. Is this a head and shoulders? Maybe. It's a small head and shoulders. Even if it's true head and shoulders, we can do a really quick measured move. So that's about 4%. That's about, maybe we can drop to September lows, especially if the bonds break higher. But overall, this is again a bullish chart. So perhaps this drop, if it even materializes, should be viewed as a buying opportunity. XLY, nice breakout to all-time highs, record highs, just continuous record highs. Probably because of the shopping season. Amazon reported results. Amazon, take a look at Amazon real briefly. Yeah, Amazon is pushing this higher, so very strong XLY, very strong chart. And additionally, this is consumer discretionary. This is pretty much as economically sensitive as it gets. So economy is doing, you guessed it, just fine. XLI, this is industrials. The selling is more pronounced in this fund, probably because of a selling in IYT, transportation sector. You can see advanced decline lines are actually moving lower here, so a little bit of a divergence. How much do we need to worry about it? Probably not much, because this is one of the sectors of the entire stock market, and there are many other stocks besides industrial stocks in the overall portfolio of S&P 500. So IYT, here's transportation, probably the reason why XLI industrials were under pressure. Again, I think this is a bullish chart. I mean, these are all-time highs. So again, if anything, this is a buying opportunity. XLV, healthcare, a little bit less volatile than other funds I just mentioned. Really solid fund, I think. Good, to have it around. Again, all-time highs. So don't see too many issues. Again, if anything, the selling of late has been most likely an opportunity. Here's XLP. I personally have a position in XLP. I was a little worried about this bottom, drop here, but let me show it to you using the elite indicators, and why I wasn't terribly worried about it. So notice that it bottomed exactly around this red line. If we got to like 51, I would be very worried, but we didn't. So that's why I'm still moderately bullish on XLP or consumer staples. Energy is basically the only fund of the sector fund that is still questionable. I'm not really sure where the energy is going. I mean, it's really trying to break out. So you can see here using the indicators that I mentioned, I need to see a breakout above this blue line, which in this case is 72.21. So around 72 bucks. If we see a close above that level, I think this fund will turn bullish, and I'll be looking to enter on the long side. Currently, I'm just staying out of it, basically. Real estate IYR, again, those are 52-week highs. Let me see if these are all-time highs. These are all-time highs. So again, despite bonds, despite negative narrative about real estate of late, this is a bullish fund. I'll be only looking to buy it. Finally, utilities also all-time highs. Yeah, sold off a little bit, but overall, this is a bullish fund. I personally own utilities, this fund XLU, and hopefully the subscribers are also long this fund. I would not short it. So again, overall the stock market is bullish. Do watch for a pullback, maybe a mild pullback, and probably we're going to see fresh highs before the end of the year again. Okay, let's move on to bonds. Here's junk bonds on a daily time frame. This is adjusted for dividends. So if you take out the dividends, the chart will look different. I prefer to look with dividends. So so far this selling from August into November turned out to be an opportunity. Notice this red hollow candle, and as I keep saying, I like these candles a lot. They show that there is a lot of buying pressure, hollow candles and red candles in particular that are hollow. Next day we see a big gap here and a follow through. So overall a bullish chart. Why this is important? Because correlation between stocks and junk bonds in particular are high, and I think that if junk bonds are going to continue moving higher, I think stocks will also continue moving higher. Notice this weekly chart of junk bonds also adjusted for dividends, and notice the correlation coefficients are high between the two. Now the Treasury bonds, represent more of a conservative, safety-oriented kind of asset. Honestly, I don't know what's going on with this fund. It's been chopping around like there's no tomorrow. Here what I see is a triangle consolidation with two inside days in a row. So inside day is a price range is within the previous day's price range, and today's price range is within the previous day's price range. So this is a clear triangle consolidation. We could see a breakout higher. If we take out 2017 highs, then we could continue. For example, here's weekly. It's kind of choppy a little bit, but it sure as heck looks like a W. So if we take out 129 and continue higher, we could see a move. Just brief estimate. Maybe like depth of this pattern is around 4%. So I'm estimating here, obviously, so maybe another 4% up. So we could potentially re-challenge the all-time highs. Alternative scenario is possible, and this is why I like to reiterate that in this business of trading, you have to keep your mind open to multiple possibilities and bet, and I always like to use the word bet, accordingly. So if you're not sure, and I'm not sure about this security right now, I stay out. That's all. I don't know if it's going to go higher or lower. If you want to do options, that's an option. But I personally just don't do options. I don't like them. This is my personal preference currently. But right now I'm just not sure where this is going to go. So I have no positions in TLT. I closed my position basically at break even, and I'm staying out of it. Will we see a breakout or a breakdown? It's a entirely possible either one of them. Investment grade corporate bonds, this also is an adjusted chart, trading next to all-time highs, and this is looking like a bullish chart, so I have a feeling it'll break higher. Here is the same chart on a weekly time frame, and notice that we just hit fresh all-time highs right there intraday this week. So corporate bonds are doing just fine. These are more the correlations get closer and closer to stocks as the quality of bonds decreases. So the junk bonds correlate highly to the stock market. LQD, which is a investment grade corporates, correlate somewhat to the stock market. But TLT would be, notice, TLT would be poorly correlated to the stock market. Let me put a correlation coefficient on it. Yeah, they are kind of all over the place. So again, overall, I think since the junk bonds appear to have bottomed, I think the stock market is in a good place to continue higher. Right, let's move on to the Forex universe. Now, as I'm recording, today is Friday, and it was a short day, Friday, November 24th. Today was a short day on Wall Street. Notice that this index actually has not been updated. This is still price data from November 22nd. So I'm going to have to use TradingView charts. So let me go there because they have an updated data for US dollar index. Notice that the dollar is pushing lower. I was saying that this was already overbought for my taste, so I'll be okay shorting it. So if you shorted dollar up here in beginning of November, end of October, you already have a nice profit there. As far as a longer term pattern, we can see on a longer term, this is a weekly chart, and notice that I changed the indicator settings. You can get these indicators by signing up at MasterCharts Trading. I think this is a really useful indicator. You can see that I changed them to 52 because there's a 52 weeks in a year. So again, looks like the dollar is selling off. On a more longer term, I wanted to point out euro on a weekly time frame. This one basically almost done trading for the week, but not much has changed. It's a classic kind of pattern. We can see a breakout right there above previous resistance, fresh highs, throwback, and then a surge. So this is a very classic kind of pattern. A lot of people use it and they try to look for a buying opportunity on this throwback. The trick is, of course, finding where the throwback ends. So this is the tough part. So here's, for example, euro versus US dollar on a weekly time frame. Notice that it went below the green line, but didn't really quite make it to the blue line. But to my subscribers, I basically say that anywhere between the green and the blue line would be a good place to buy. And you can do the same thing on a daily time frame. Simply change the settings to 250 right there. So I think I tweeted out this chart a few weeks ago, and basically this would be already a profitable trade from November entry if you entered right there. Let's continue to briefly British pound, GBP, USD. Again, this is a weekly chart, but today's data is not there, and I'll also look at US dollar versus Japanese yen. So there's GBP USD. This looks like a bullish chart to me now because we have a breakout, fresh highs. Notice that we're bottoming exactly at the blue line, several twice there. So I think this is a British pound is bullish versus the dollar. Finally, US dollar versus Japanese yen, a little bit indecisive, but you know, if the dollar is losing ground against other currencies, it would make sense for the Japanese yen to appreciate as well. But this chart is a little bit indecisive, US dollar versus Japanese yen. We can see that it's just kind of trading sideways without really a breakout or breakdown. But we can see now that we're getting to a kind of breakdown territory. So potentially, if the dollar continues lower, I think the Japanese yen will also gain. So in this case, this particular pair could be shorted at the blue, or the red, or even the yellow line, especially if we see a breakdown below the yellow line. Again, you can get these indicators at MasterChartsTrading.com. Just ask me how. Right, let's continue to gold. I'm having the same problem with gold as I'm having with the currencies and dollar index, because notice that this is a November 22nd data point. So I'm gonna have to go to the ETF, the tradable vehicle. Here's GLD. I think this is a bullish chart because these are fresh highs, and some other reasons I follow some of the gold miners, and I think they are in the uptrend. So here it's kind of difficult to see, so I'm gonna go again to my elite indicators. I think it'll be easier to see there. So here's let me see, gold futures. We can do GC one exclamation point. So here's what I'm kind of concerned about. Today you can see that gold actually lost for the day, and additionally it was basically flat for the week. Let me do a weekly chart as well. So it was flat for the week and down for the day, and I am really not sure what's happening because you can see the dollar is going lower. So I don't know exactly why. Perhaps it is perhaps gold is correct, perhaps dollar is correct. It's difficult to say. Maybe it's just a fluke. So one day does not a trend make, but something that needs to be paid attention to if you trade gold or any of the gold proxies, for example GDX. So notice this is a weekly time frame, and gold actually lost a fraction of a percent for the week, while the dollar index also lost let me see, it was a significant amount. It was like almost a percentage point. So it is weird, I guess is the word, unusual, and I am watching this quite closely. Of bigger concern, I wanted to show GDX. Actually, let me go to daily time frame. It's easier to see on the daily time frame. Here's GDX, and again, I also tweeted this chart out. So I think the gold and gold miners are bullish, but it's been kind of dragging its feet. And additionally, notice this blue line is now acting as a resistance. So we have 3 touches of that line. And unless we break above it, we could seriously roll over and continue lower, and that would be a big problem, obviously. So here's the weekly time frame for GDX, kind of feeble bounce really. On the weekly time frame for GLD, notice this, basically a doji spinning top kind of candlestick was basically indecision, and yeah, indecision. So dollar is acting consistent, but gold is acting inconsistent. So I am not exactly sure what's happening. So we'll see where this takes us next week. Okay, let's look at commodities. Same thing as with gold and with foreign currencies. I see only data point here from November 22nd, so I'm going to have to use a TradingView interface because they have well, basically latest data. So I tweeted this chart out for light crude oil futures. Notice that the support was found exactly at this green line, and we rallied. So these lines provide very useful support and resistance in my opinion. I use them myself and I trade myself on them. So you can get those at MasterChartsTrading.com and find out from me how you can get them. So on a longer term time frame, I think oil is now in an uptrend. How long this will continue is anybody's guess. My gut feeling is that we're going to see producers, especially American producers, come online with more rigs, and that would mean more oil because prices are nice. The thing that bugs me about this breakout is that energy ETF XLE is not really confirming a breakout in oil. I mean, we saw a big move here, consolidation, another move, but now we sold off. And again, notice that we're below this red line. And even today, I don't know if you can see that, but I can zoom in and see if you can see it better. Notice how today the red line actually acted as resistance right there. So for me to become excited about XLE, I want to see a breakout above 72.21. Why 72.20? Because that's just the indicator. It's a calculated number. So I'm waiting for that breakout, and so far I don't see it. So personally, I'm staying out of XLE, and I'm still on the fence if I even want to trade oil. It's just I'm not 100% convinced that indeed we're in a bull market and we're going to go significantly higher. So I'm kind of staying out of it for now. Natural gas. Let's move on to natural gas. So let's do natural gas futures first. The charts have been like all over the place, and I'm not exactly sure who to trust anymore. But here is natural gas futures. Now I'm a retail investor. I don't trade futures, so I'm stuck with UNG, which I really hate. But here's natural gas futures as traded on NYMEX. This looked to me like a candle that was adjusted because I don't see the same spike down and even a close below this yellow line on other charts. So for example, here's natural gas on the daily time frame. This is a natural gas continuous contract. It's just not there. This spike is not there. So I'm not sure who to trust. So if I go with this particular chart, then yes, we're in a bear market and we should be short in natural gas. And notice that actually we found resistance exactly at the red line several times here. I'm gonna mark them on the chart so that it's pretty obvious. Whether or not, again, we will continue lower is anybody's guess, but for now it appears that we are in a bear market for natural gas, and perhaps we will continue moving lower. So I just marked, the places where I would be pretty comfortable shorting it, basically at the red line right there. Okay, that's it for this week's recap. If you have any questions, please send them in, and do sign up for trade alert services. So if you go to MasterChartsTrading.com, you can get monthly, 6 months, 12 months. Now what I am doing as of late, notice that this number 15 and 16, you're basically getting those elite indicators that I've been showing to you. So here's my published scripts on MasterCharts Trading. I just opened this channel, so there's not that many followers, but it's been growing. So here are the two scripts, short and long, and I can explain pretty much everything, how it works and all that. So do sign up, and I hope to see you in one of my services. Again, thank you for listening. gratitude, charity, and wisdom to you all, and hope that my work helps you achieve your goals in life. Thanks for watching. Have another great trading week. Bye-bye.